Welcome to another in our series of informative little videos to keep our shareholders and those of you just interested in Great Divide Mining up to date and as informed as possible. So today's topic is why gold? It's a question I'm asked the most, and the second most often asked question is why now? So why gold and why now? Well, two reasons: stability and history. Gold, the gold market and the gold price is just more stable than most other minerals. I'm a geologist. I've been around for a few years. Gold is just different to most other metals. Unlike many minerals that have only recently come to be of interest, and I'm thinking here of lithium and some of the other battery metals, gold has been mined and traded for centuries, probably longer than pretty much any metal. And we can learn so much from this history. You just need to know where to look and do your research and have a listen to it all. Gold's value is secure. Throughout human history, gold has been considered a secure source of wealth. This is unlikely to change anytime soon, and there are some very good reasons which I'll cover off shortly. So let's look at this stability of gold price over the years. There's a chart here of the price of gold over the past 10 years. Do you see the stable, steady price growth? Now let's compare it to one of the modern metals, lithium, which has only recently become popular due to its use in batteries, especially in electric vehicles and those things. Can you see the price difference in the price stability? So why the difference? It's quite straightforward. There has been a significant increase in the demand of lithium carbonate driven by all the new batteries and battery-powered devices. Off the back of these record high prices, new miners were sought to enter the market, and which is great if you already had a lithium mine operating at the start of the price rise. But a new mine takes 3 to 5 years to bring online. So now we have new mines coming online, which gives more supply. So the heat just come out of the pricing. It's simply supply and demand. So what do you do if you bring a new lithium mine online? Continue to follow the prices down? Or do you try to recover your initial investment? Or what about what's going to happen to your shareholder value? Well, it's all happening to iron ore as well at the moment. So construction boom is over in China at the moment. Iron ore is down, so it's coming down from about $200 a tonne to just over 100. And gold just isn't like that. So we'll take a deeper look into the gold market and the gold price. What's happening historically? Notice the difference, the gold difference. Yes, there have been price spikes, but they go upwards, always upwards, because gold is seen as secure in times of global insecurity. After the spike, the price returns to the steady growth trend. There have historically been no significant collapses in the gold price that I've been able to find. Looking at this chart, there's a spike around 2008. What happened there? High inflation because of strong oil prices, Russian invasion of Afghanistan, Iranian revolution, all these things. But right after, the gold price returned to the trend. It didn't collapse. Gold just doesn't do that. And again, 2008 to 2012, global financial crisis. Not just investors, but many of the world's central banks went around buying up gold. There was real concern about the collapse of the EU. But right after, the gold price simply returned to the trend. It didn't collapse. Gold just isn't like that. Now let's talk a little bit about history, and most especially why the history of gold mining and gold prices is so important to a company like Great Divide Mining. Here's a chart of the gold price for over 300 years, so it goes back to 1720. Back then gold was below US $20 per ounce. Here's a little interesting fact. Sir Isaac Newton, as master of the UK Mint, first set the gold price at £3, 17 shillings 10 pence per troy ounce back in 1717. The gold price then remained remarkably stable for over 200 years up until the Great Depression in the 1930s, when it broke through US $30 an ounce and stayed in the 30s until the 1970s. It only broke through US $150 in 1974 and then $1,000 US back in 2009, 2010. So what's happened to all those gold mines that were operating at 20 an ounce, 30 an ounce, 50 an ounce, etc.? They're all still there and mostly abandoned when their economics of operation just didn't stack up any longer. And that's where GDM comes in. Historical workings, we believe, give GDM a running start. Rather than speculative exploratory work and drilling, which carries with it a higher level of investor risk, GDM's exploration work, on the other hand, is significantly de-risked, as we are working in areas where gold has not only been previously identified, but has in fact been commercially mined at lower gold prices. So these deposits were once considered commercially attractive in days when the gold price per ounce was significantly lower than today. An ideal historical site for GDM would then be an old, abandoned, manually worked mine from an era when gold prices were less than, say, $50 US an ounce, with the resource at a shallow depth, allowing for modern open cut mining. If only, you might say. It sounds good, too good to be true, but you'd better check out the GDM video about our Cape project then. Research twice, dig once, and plan twice, dig once. Digging once not only reduces capex but increasing shareholder value, but it also protects the environment, which is a significant bonus. Let's look at some other advantages of historical so-called brownfield sites. Historical workings often have significant physical evidence of mining activity and historical records, enabling GDM to set up really focused confirmatory drilling programs. Focus means cost savings and higher odds of success, because we already know that the gold is there. Modern drilling, technical studies, geophysical methods, they've all improved exponentially. GDM did not have to drill to locate the resource, we just needed to confirm the presence of something that's already been mined, and then identify extensions to the strike and depth, and it's all there for us. Historical mine sites have other advantages too, including easier permitting, often proximity to existing infrastructure such as roads and processing facilities and so on. And historical workings protect the environment, because why dig another hole if you've already got one? It's all about speed to market. How quickly can we get into production? How quickly can we halt the cash burn and start operating from revenue? But speed to market wasn't our only consideration. GDM wanted speed to market and lowest possible capex. And in closing, one final reason why we love gold. Gold is often found in association with other valuable metals, especially what are called the modern metals like antimony, copper. And when we find commercial gold deposits together with these other valuable metals, we get to use our third favourite phrase at GDM: dig once and invoice twice. Love it.